Is Wall Street on the edge of a game-changing week? With the Fed, trade deadlines, and big tech earnings all colliding, CNBC's Fast Money panel debates whether the market is about to hit a major turning point.
This week, so at the risk of, I guess now I'm talking.
Yes, so, you are talking.
Well, what's interesting, markets always, there's a moment where you say, you buy the rumor and you sell the fact. Mm-hmm. And is the EU trade deal, or essentially looking like we're at the place where trade deals are going to be concluded by April 1, is it to sell the fact because we priced it in? Or is it sell the fact because tariffs now really are an issue? We've got tariffs that are now 6 times what they were when Trump took office, and we've got the highest tariffs in post-World War history. So I do think at some point that's going to be an issue. And I do think we've we've inched higher every time we get some better news. I thought last week's Japan news was the kind of news that the market really liked. But as you pointed out, almost everything that could bother the markets is happening this week. The one part that I think is probably going to be okay, but is the biggest part for markets as we get into the fall, is that jobs number. The jobs number is the most important ingredient for what the Fed is going to do. And I think if the Fed is going to be more aggressive, meaning more dovish, you're going to have to start to see some weakness there. We're not even close to that, but markets aren't priced for any weakness in the labor market. So again, markets are going to all this at all-time highs. I'm not saying it's sell the fact, but I'm telling you the fact is very real, and I'm not sure we've priced that in.
It's always about, without a question, earnings matter. I mean, to state the obvious, UPS tomorrow, I'm interested in that because it's been a disaster now for the better part of 3.5, 4 years. Stock's been cut in half. Is it a UPS thing, or are there other things at work here? It has been a UPS problem specifically. I think Coinbase on Thursday is fascinating. Given the run, they better say something great. Otherwise, valuation gets in the way. But to Tim's point, jobs matter. And I'll say this again. The bond market is really stubborn here, and I think people are starting to come to the realization that, wait a second, I thought yields were supposed to go down, and they're actually starting to tick up. Now, I understand the market doesn't care. There's going to be a level where it starts to care, and I think today was an indication we might be getting closer.
Yeah, tech earnings for 500, Mel. That's the one I want to focus on here, because I think Google told us a little something yesterday. Good quarter, good guide. They kind of had commentary in and around the things that people were most worried about here, and it was good quarter, right, all around. But then that CapEx thing, a year ago, that would have been like a sort of bullish thing. Now it's almost an acknowledgement of how they have to play catch up, depending upon where that spend's going. I think that could be a focus for Meta. We know that they've been spending like drunken sailors on talent. We know that they've been kind of committing to more and more CapEx. And we also know that Llama 3 is just not a great model, and it's just not kind of stacking up pretty well against what OpenAI and those sorts of things are shipping. So given the run that a lot of those stocks have, given the multiples of where they are, and again, I know that's not that important, but it's important if you start to see this CapEx being a drag on profitability at some point, especially if you're not monetizing it on the other side. So Microsoft is probably the one that's going to demonstrate what they've done last quarter with Azure. They've seen an uptick in that, and they're actually getting some traction as far as AI sales. A lot of that has to do with their OpenAI relationship. But I think all of them, if they put up those quarters and they put up the guidance and they don't rally, I think it's kind of telling you, I don't know what else is going to kind of be the next leg of this rally.
I thought you were mentioning Alphabet because of the reaction or lack of reaction on the back of earnings. Because even if you thought they were good, the fact that they finished, the stock finished the day up 1% the day after is not great. Take a look at Netflix. That quarter was really good.
Yes.
It's down 7% roughly since they reported earnings.
Okay, just to play the devil's advocate. Yep. So running into earnings, Netflix was up enormously.
Sure, yeah.
Alphabet was up enormously. And you have Meta is up. It is not at an all-time high. Amazon also up, not at an all-time high. I'm optimistic on Meta and Amazon's earnings. I think with the VIX here and how far the market's come, I think you got to have some protection. So that's what I've been doing, even though I'm staying long. Remember when Liberation Day was announced? So you had this tariff levels that nobody ever imagined anything remotely close. And one of the things that was super damaging was confidence. Right? Confidence is back. We're starting to see a lot of spend. And when you look at what part of the big, beautiful bill was, I come back again to this CapEx thing, and there is a confidence there that people are willing to spend. We also started to see bank regulations come in a little bit. Banks did very well. They've come back a little bit. But so I think earnings will be okay. Whether or not those stocks will be up or not, I'm not really sure. To me, the data points about PCE and labor are even more important because I think another leg of this market will be